Haria joins us. Let's take our conversation forward with Digant to understand that what he makes of the numbers which we've got from Paytm. And Digant, I've got 3 brokerage reports. All of them are saying, we told you 1 year ago that Paytm was always a great story to buy. Are the last 2 quarters endorsing just the obvious?
So Nikunj, hi, good morning. See, Paytm, all the positivity that you see has come on 2 accounts. One is that they have really cut down their costs in the payment business. Payment business was the backbone of Paytm and uh, a loss-making part of their overall business. So they've controlled the losses there. That's number one. And number two, they've done a good job in terms of loans. So like we all were sure that payments in India is not a profit-making business. So what you have to do is you have to cross-sell something to the customers who are there on your payment platforms. And loans was the most sort of popular and the most logical thing to do. They have done it. They've done it quite well. So this year they have had around 35,000 crores of disbursements through 3 or 4 NBFC partners at the back end. So which is why there is this excitement. I believe that this excitement will be tempered in the next year because of 2 reasons. One is that the competitors like PhonePe, Google Pay, they are also eyeing the lending business very aggressively. So next year you will see a lot of competition coming in for Paytm. Right now Paytm definitely has an early more advantage. Next year competition will come, and then let's not forget that at the end of the day they will need RBI's blessings if they have to get an SFB license or an NBFC license and build their own balance sheets. That's point 2. Point 3 is that if lending is going to be the big driver of profitability and turnaround in Paytm, then in the markets value lending business on price to book and not on like 10 times price to sales or 30 times price EBITDA multiple. So I think it's good. The delivery on the lending business is quite good. But I think we still have to put valuations at a rational level, which definitely does not appear right now.
Yeah, valuations have to be at a rational level. What is the benchmark you are using to decide that?
So Nikunji, if we just do some crystal ball gazing that 2 years or 3 years down the line, if these run rates continue in the lending business, maybe Paytm can do 1,000 crores of EBITDA. It will be the first fintech to do that kind of an EBITDA number, and not adjusted EBITDA. I'm talking about the EBITDA which you and I really like to look at. So that EBITDA of 1,000 crores, but we're still trading at market cap which is close to 40,000 crores. So I don't see that if somebody is getting excited at these levels and buying the stock, it's not a multi-bagger. But yes, we've come a long way from the negativity of a year back when things did not really look great. So now at least there is a hope that the lending business can bring that turnaround. 2 barriers to that. One is the RBI's blessings on the way all these fintechs do businesses, and second is that if lending becomes a primary driver, then we don't value it at 10 times price to sales or 30 times EBITDA. We value it at price to book or price to earnings.
Digant, hi, morning. What is the outlook in terms of the loan book quality for Paytm? Because we know that they don't lend, but do you believe that it affects the fees that they earn on their loans? Is there any sort of a downside risk there?
I think right now, see, they are lending. There are 3 businesses. Okay, they lend the BNPL. If you shop, you get loans for that. Then you get personal loans, and last is you get merchant loans. So India has these lakhs of kirana shops. They also take loans from Paytm. So I think credit cost, it's too early to say. We are very much early in the cycle. I would not really worry much about credit cost right now. Next year when competition kicks in and there is a lot of chase to increase the loan book, that is when credit cost worries will also come. So everybody has to go through the cycle, and I think Paytm will also have. But I think it's too early to worry about credit losses because this is a very small loans they give. They give 10,000 rupee, 50,000 rupee, 1 lakh rupee loans, and they give it to lakhs of people. So at least that way the risk gets diversified. But yeah, it's an untested area. We'll get to know better about credit behaviors in a year or 2 from now.
Okay, fair enough. Given the fact that in the month of December last year, you did have Vijay Shekhar Sharma vowing that there would be zero cash burn or they would look at ways to reduce that, brokerages tend to allude to the fact that the cash burn will end only a few quarters down the line. What's your outlook?
See, I think cash burn will, I would say the cash burn will end only when the lending business really becomes big because, see, you have 10 crore customers who are there on the Paytm platform. Now, to keep them engaged, you have to spend some amount of money. There is no going back. You will need some employees, you will need to run some schemes, you will need some tech support. So, it's not easy for them to reduce the cash burn in the payments business. What they can do is they can contain the cash burn and eventually they can grow the lending business so that the profits from lending eventually translate into the bottom line. So I'm not very hopeful that the cash burn on the payment side goes away so fast because the phone pay will also become aggressive in times to come. So that is a space where they'll have to keep burning some money. But lending business is what we are most excited about. That this is a space where ATM is doing something which the banks don't do.
Yes, indeed, fair enough. And just a quick outlook on the stock, given that it has been seen quite an overhang, priced at close to 3 times book now. Very few times is a stock like HDFC, for instance, priced like that in the last 10 years. What's the outlook on Paytm in terms of the stock price opportunity?
So you're asking on Paytm, the stock price outlook. So yeah, Paytm, as I said, I feel that it's still 2-3 years down the line, even if they make that 1,000 crores kind of EBITDA, not the adjusted, but the ones that we measure. I think stock is still quite expensive, and let's not forget there's an RBI overhang, there's a regulatory overhang, which is there on the entire fintech sector. So if somebody is looking at long term, I think this price may not give you great returns. You have to wait for bad days. You have to wait for days when RBI acts against these entities or something like that. I think anything below like 450, 500 is the place where you have good margin of safety, considering that a lot of things are new in this business.
Was actually an HDFC that I was talking about in terms of being priced at 3 times price to book. So just wanted to get in your take on what the outlook is on HDFC as a stock. Apologies.
Okay, sorry. So HDFC, HDFC will has a big challenge in terms of garnering deposits because they are going to digest a very large acquisition, which is the home loan, the HDFC Limited, and for that they have to open branches, give higher rate of deposits versus SBI or ICICI. It's the first time in last 10 years that HDFC is offering higher deposit rates across all maturities, and that is how it is getting this deposit growth. So I still think that let the merger get digested. Let us see 2-3 quarters of merged numbers. That is when you will get a clear sign on HDFC that yes, this is a 16-18% kind of compounding story. I think another 2-3 quarters for HDFC Bank still looks a little challenging versus say an ICICI Bank, which has absolutely no challenges, nothing to complain about, nothing to worry about. So HDFC Bank, in my view, will remain in this 1600 to 1900 range for 6 to 12 months till the HDFC Limited merger is well digested and the nuances of that merger are well known to the markets and the analyst community.
Right, Digant, great to have you on the show and glad that you could take time out to analyze HDFC Bank as well as Paytm. Okay, let's move on. Let's talk about what's